weakness that we had this quarter in some of the infrastructure and capital goods companies. Rajiv Batra, the CFO of Cummins India, joins us on the phone line. It was a lackluster performance for the company. The income was up just about 4.6% and the profits were actually down about 2% or so. Mr. Batra, morning. Thanks for joining us. What's the sense looking like for the second half of the year, both in the domestic and the export business?
Well, I think on the domestic side, we have done well. Our domestic revenues are up, and our guidance of about between 10 to 15% remains. So while tentative, we do see some changes, positive changes, on the domestic front. These are mainly in the areas of infrastructure. There are some sectors that are doing well, and these are direct responses to the investment being made in those sectors by the government, such as railways, and some sectors which have, on the industrial side, revived for us. The weakness we had this quarter was on our low horsepower exports. Last quarter, we had some buoyant exports in some markets in the world, and that was more like a pre-buy. And telecom orders in those markets generally are lumpy. So once those orders are executed, then we come back to our run rate business, and that's exactly what happened in this quarter. So our guidance on exports, given that we have a lot of exports to markets in the West, which are still recovering, our guidance on exports has always been 0 to 5%, and on domestic, between the 10 to 15% range, and that's exactly where we are. This is a quarter-on-quarter variation. But in general, we would like to say the recovery is still tentative.
Mr. Batra, hadn't you upped your guidance from that earlier 0 to 5% to 10 to 15% on exports?
See, we have encountered headwinds on some of the developing markets, the developed markets, and that would be, again, like I said, quarter-on-quarter variation. So at this moment in time, we are saying 0 to 5%. And by the time we hit the end of the fiscal, this could very well change, but this is what we are looking now.
Okay, so that's incorrect. I think they've kept the maintained domestic growth guidance. It's not 10 to 15%. It's 0 to 5%, as Mr. Rajiv Batra,
0 to 5%, and
that he just clarified. Fair enough. Mr. Batra, you spoke about the domestic sales doing well, and some of it because of investment in railways. So should we understand you got orders from railways? The impression was that the railway investments are still to pick up. You've seen them already picked up?
On the contrary, we are seeing them picked up, yes. And we are seeing some other sectors also, which have posted signs of recovery. And domestically, our power gen business is also doing well. We're picking up share.
Okay. I just want to, reiterate some numbers. You said that in the domestic business, your guidance is 10 to 15%, correct?
Correct.
Okay, so you maintain that. And in the export business, your guidance is 0 to 5%.
0 to 5%.
Okay. Which are the export markets where you are seeing a slowdown now?
The developed markets where our high horsepower products go, they have not recovered. In fact, we are looking at further weaknesses in those markets. And our low horsepower products, these go to the Middle East, the African markets, rest of Asia. So those markets are doing well, subject to quarter-on-quarter variations.
Okay. Which other domestic sectors you said are showing improvement other than railways?
Our power gen market has been mild as you compare that to last year. We clearly are picking up shares in those markets, and we are seeing on the high horsepower side some positive signs. And these are all markets which respond to investments. So as capacities are created, there is a response which you see via high horsepower buying in the domestic market. We are starting to see that.
Okay, just wanted a view on your margins as well. This quarter, your margins are at 16.8%, but you had, guided for EBITDA margins at more than 15% at the start of the year. It's held on to more than 15% up until now. But for the second half of the year, what is the expectation?
We'll maintain what we have this now. I don't see our margins slipping. We usually don't talk about margins, but we are well within where we want to be. And clearly, the market is aggressive, and we have responded, which is why we are seeing increased share. So we are where we want to be, and this is where we will stay for the rest of the year.
All right. We'll leave it at that, Mr. Batra. Pleasure speaking with you. Thank you very much for joining us with those details on your results. So positive about the domestic growth, seeing it between 10 and 15%. That's important, though exports is where things are not looking too good. Must add that at the moment the markets have distinctly shown some signs of recovery. In early morning trades, in the first 2-3 minutes of trade, it was 15 stocks in the red for 1 in the green.